Today, I want to talk about how the shorts are illegally lending out your AMC shares and using them to cover off their FTDs, and they're even admitting to it publicly. And they do it because they know the SEC is severely underfunded and paid off, and therefore won't do anything about these shares being rehypothecated over and over and over again. So stay tuned and let's make some money. Now I'll dive straight in with the key information. So, Travis tweeted saying so Virtue can receive stocks that were given to them as collateral and repledge those stocks to other market makers, who can then repledge them to another market maker over and over and over again, meaning to reloan out those stocks they received as collateral from borrowers to make securities lending transactions to short sellers or to cover off their FTDs. From page 13 of Virtue's 10Q, it says the company is permitted to sell or repledge stocks received as collateral, and also use those stocks to enter stock lending transactions or to deliver these stocks to counterparties or clearing organizations to cover short positions or FTDs. So they can sell or repledge stocks received as collateral, and obviously by repledging to another market maker as collateral, that second market maker can then repledge again and again and again. This is effectively how they use a very small basket of available stocks to continue satisfying their FTD implications and to continue kicking the can over and over again. And I also want to show you this video in a little while that gives a real life example of exactly how that happens and exactly what that looks like. But Travis also tweeted saying Virtue also enters various transactions involving derivatives, just like swaps. And these instruments or these derivatives are used to conduct trading activities. And futures and forward contracts provide for delayed delivery of the underlying instruments. This is obviously how they can continue taking out more short positions with swaps and with forward contracts and effectively delay the borrowing or delay the delivery of those real shares. Now this is a video of a man buying every single share available in a company, over 100% of the float, but the stock was still trading 50 million times the very next day with 0 shares available.
In March 2005, the Senate Banking Committee confronted then SEC Chairman William Donaldson with a story about Frank DeBrookie's company, the Nevada-based real estate holding company Global Links. An investor named Robert Simpson had set out to prove that small companies were indeed frequent targets of abusive naked short sellers. Simpson placed an order for $5,000 worth of stock in Global Links. That got Simpson ownership of all 1.1 million Global Link shares in the market. Not some of them, all of them.
There were no shares available to be borrowed, and yet in 2 days there were over 50 million shares traded. That's clearly something that needs work.
I was absolutely blown away when I bought 1,282,050 shares, which equated to 111% of the issued and outstanding.
So this guy purchased 1.2 million shares, which was 112% of the available float, but somehow still 2 days later, over 50 million shares were traded. There should have theoretically been 0 shares available or even negative 100,000 shares available, but the float was still somehow traded around 50 times its size in just 2 days. That obviously goes to show that with all the synthetic shares created, there must have literally been a pool of say 1 or 2 available shares that were traded back and forth 50 million times. And these shares were obviously used over and over and over again to satisfy those closeout requirements and to close out of those FTDs. Guys, with Moomoo you can currently get a guaranteed free share of Tesla or of Google and a $100 cash award, which you could always use to buy more shares of AMC, GameStop or Ape. All you have to do is sign up to Moomoo using the link in the description below and make a qualifying deposit. If you just want that $100 cash reward and 5 free stocks, all you need to do is deposit $100. If you want more free stocks and a guaranteed free share of Tesla or of Google, just make the required qualifying deposit. And it's funny that still to this day, big mainstream media outlets like Forbes try to claim that synthetic shorting does not exist. Unusual Wells tweeted saying this is a real article from Forbes describing that naked short selling isn't really a thing. When literally on the 12th of June, the SEC charged investment advisor Savvy Management LLC and its managing partner Hal D. Mintz with fraud in connection with naked short selling. This isn't just something that happened back in 2005 and was never heard of again. It still happens to this very day, even as far as just 2 weeks ago. And the reason why it still happens is because we're effectively being openly robbed in the stock market, because the SEC does absolutely nothing to combat synthetic short selling. Wall Street Apes tweeted saying you're being openly robbed in the stock market. Head of the SEC, Gary Gensler, said, "I think that the American public kinda gets it, that the system is not fully working for them." Gensler admits he can do nothing to fix the system because Congress is lobbied by large financial institutions. And John Stewart from The Problem said the apes exposed something really interesting. They crowdsourced a way of rooting out corruption. Now, this was obviously brought to light by us, the apes, and also John Stewart on his podcast, and is now being properly investigated and exposed by James O'Keefe. I think the shorts are currently getting more and more scared of the exposure that we have brought to the subject, and they know that it's all going to come out and come crashing down. That's why they're trying to increase the amount of FUD articles trying to dispel synthetic shorting as a myth. But obviously the SEC is working against the mainstream media now, exposing synthetic shorting for all to see. And it seems the shorts are becoming even more scared because timing is everything. Spence tweeted saying Adam Aaron is about to pay out bondholders or pay off the old bondholders who are most likely short AMC. And he said, "I believe some massive legacy AMC short covering is inbound. It's likely the July 2023 AMC callable bonds will be paid off at the exact same time as this massive legacy short covering." And obviously if we do see this massive legacy short covering, that is basically words for seeing an AMC short squeeze. So it'll be very interesting to see if these callable bonds do end up being a potential catalyst or the catalyst for the AMC squeeze. And Mr. David Neo has basically said if we do see that squeeze, it's likely to look something very similar to this chart for the Berkshire Hathaway stock. Back in the early 90s, Berkshire Hathaway was trading for around $290 per share. Obviously, over the many years, that then increased significantly to around $500,000 per share. Now, obviously, the bottom for AMC was significantly lower than $290 per share. But all that really means to me is that AMC definitely has potential to see at least $5,000 to $10,000 per share. If you divide $290 by 100, you get $2.90, which is around AMC's bottom or lowest price. If you divide $500,000 by that same 100, you get $5,400 per share. And I personally think that seeing AMC at $5,000 per share would be a plenty satisfactory squeeze price for myself. I too have also been building up AMC shares over the last 2 years, and whereas before I may have needed $50,000 per share to achieve my squeeze target, I could now say that $5,000 would be satisfactory. Again, some of you may be holding for higher than $5,000, some may be holding for lower. Obviously, every individual squeeze target is yours to decide, and no one should persuade you as to what your target is. But seeing stocks at $500,000 per share just goes to show that an AMC squeeze is absolutely reasonable and attainable. Especially because, as Biggums has tweeted, many of these short sellers like Doug Sifu seem to be scared of a live stream with Biggums, but they're perfectly happy to run off to known shills like Al from Boston and others and live stream all day long. Why does Doug Sifu seem to be happy to live stream with Al from Boston and that girl Amy Trader, but not want to do a live stream with Biggums? And it's because Al from Boston and Amy are also paid off short sellers as well. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.